China's exports and imports unexpectedly contracted in October, the first simultaneous slump since May 2020, as rising inflation and rising interest rates weighed on global demand, while fresh domestic COVID-19 restrictions disrupted production and consumption. The dismal October trade numbers highlight the challenge for policymakers in China, as exports were one of the few bright spots in the struggling economy. Outbound shipments in October shrank 0.3% from a year earlier, a sharp turnaround from a 5.7% gain in September, official data showed on Monday, and well below analysts' expectations for a 4.3% increase. It was the worst performance since May 2020. The data suggests that overall demand remains weak, adding pressure on the country's manufacturing sector and threatening any meaningful economic pickup amid ongoing COVID-19 restrictions, continued real estate weakness and global recession risks. Chinese exporters were not even able to benefit from further weakness in the yuan currency and the important year-end shopping season, underscoring the mounting strains on consumers and businesses worldwide. The weak export growth likely reflects both poor external demand as well as the supply disruptions due to COVID outbreaks, said Jiwei Zhang, chief economist at Pinpoint Asset Management, citing the COVID disruptions at Foxconn's factory, a major Apple supplier, in Zhengzhou as an example. Apple said it expects fewer than expected shipments of high-end iPhone 14 models following a major production cut at a virus-hit factory in China. Looking forward, we think exports will fall further over the coming quarters. The shift in global consumption patterns that pushed up demand for consumer goods during the pandemic will probably continue to unwind, said Zichuan Huang, an economist at Capital Economics. We think that aggressive financial tightening and the drag on real incomes from high inflation will push the global economy into a recession next year. Nearly 3 years into the pandemic, China has maintained strict COVID-19 containment policies that have taken a heavy economic toll and caused widespread frustration and fatigue. Weak factory and trade numbers in October suggested the world's second biggest economy is struggling to emerge from the quagmire in the final quarter of 2022 after reporting a faster than expected recovery in the third quarter. Chinese leaders last week pledged to prioritize economic growth and push ahead with reforms to allay fears that ideology may prevail as President Xi Jinping inaugurated a new term and disruptive lockdowns continued without a clear exit strategy in place. View was sluggish domestic demand, weighed down by new COVID restrictions and lockdowns in October, and the cooling real estate market also hurt imports. Inbound shipments fell 0.7% from a 0.3% rise in September and came in below a forecast 0.1% rise, the weakest result since August 2020. China's soybean imports fell and coal imports slid as strict pandemic measures and a real estate slump disrupted domestic production. The overall trade numbers resulted in a slightly larger trade surplus of $85.15 billion compared to $84.74 billion in September, missing a forecast of $95.95 billion.